Right, crude oil. Mostly trading sideways really over the last month, but we did hold some decent support. Low was 51.23, not really close enough to my 50, 70, 50, 50 support level to actually get long. But we bounced off it anyway. Again, the Bollinger Band's working quite well here. Well, as they do in a sideways trending market. You see, they don't work so well when the market's moving in one direction. Not so well at all, but in this sideways moving market, they are worth sticking back on again. So the question now is, are we breaking above the upper Bollinger Band? We'll need to break the previous high, which is 55.75. Where did we get to? 55.87, but we didn't manage to close above it. So now the question is this a double top, which will be obviously clearly negative? And we do have diverging stochastics. So that is certainly a strong possibility that this is a negative divergence and indicates that the market will turn lower. You see how we've got more of an upward sloping trend line there, downward sloping trend line here. There's a real risk that the market will turn lower, but if we manage to get up through $56, that's going to look a lot more positive, and there's no reason why we can't get up to 57.10, 57.60, who knows, maybe even 57.80. So quite a pivotal price we are at the moment. Does the weekly chart tell us anything? No, nothing on there that I think is worth mentioning. Okay, so if you want to try a short, I think it's probably worth it. The risk reward is small. A break above $56 and you're out and you're into a long position with a chance of at least 100 to 150 ticks profit on that trade. If you're short and it works, there's also some decent scope to get to 53.60, this little trend line down here at 52.90, 52.85, and who knows, maybe even as low as $52. Emini S&P, looking good. There's been a lot of talk around about the market crashing and reversing, and I did wonder whether the market would reverse at certain important resistance levels like this one here, but we broke above it. We used it as a really nice base to then continue the recovery. Last week, strong run, and we've closed near the high of the week, which is always a positive signal. Daily chart, yes, we're overbought, but who cares? We're now up through the 200-day moving average. We paused nicely, as we should have done, really. Initially, we held it and dipped, and then we challenged it. But by Friday, a strong run up, a strong close on Friday. I wouldn't worry about the upper end of this Bollinger Band. They can widen out and they can push higher, opening the door. Well, the next obstacle is this trend line, but I think it's relatively minor. 27.90 is a trend line that joins the three peaks here, mid-October, the November high, the December high. I think we can get through that. I don't think that is something that's going to cause the market to collapse. So let's see if we get up through 2800, and then really that is a really clear path to 2800. Once we're through 2800, well, we can, and then we'll then need to clear 2824. What's this high? 2817. Okay, so we've got a bit of action in the high teens, the low 20s. But once we get through these peaks, then we really are motoring. But I think once we get through 2800, we go. Okay, the Nasdaq chart, weekly chart looks good. There's nothing really in the way of a further rally. So bulls look pretty good from that perspective. On the daily chart, we've got this 200-day moving average doing a good job, as it should do, as resistance. We couldn't close above it on Friday. I'm gonna bet on the bulls. I think we're going to get through it. I think we're going to get dragged up with the S&P and the Dow Jones. I was wondering whether the Nasdaq would cause those other US markets, would drag them down, but well, it hasn't gone down. And I don't think this is a double top, so I'm gonna stick my neck out and say I'd rather be long than short the Nasdaq. And once we do get through, you know, what was the high on Friday? 70.95. We've closed sort of bang on the 200-day moving average. Anyway, I think we're going to go. I'm going to take these fibs off because they're no longer relevant. Anyway, that's what I would suggest. Let's have a quick look at the Dow Jones. You don't have to be a master technical analyst to see that this looks pretty strong. We stumbled at the 100 and 200-day moving averages here. We broke up. We retested them as support. We used it as a nice base. That candle was a clearly quite bullish with a spike down and the almost equal close, only a very, very small red body candle. I think you call that a hammer. Bang, off we go. Big blue candle on Friday just to reinforce the fact that we're breaking higher up through the upper Bollinger Band. This looks really good for the Dow Jones. No reason why we can't keep pushing higher. I wouldn't worry about the overbought situation. The bears are getting really, really squeezed, and I don't see any reason why they won't continue to get squeezed. Now the DAX, which has not been able to keep up with the US markets, not in any way, shape or form, could have a bullish pattern here. Could finally have an inverse head and shoulders pattern. This looks really, really promising. Let me take this trend line off. This could be a really nice swing trade opportunity. So let me just close this up a bit. Clearly the market's been in a bear trend, and this is a beautiful little inverse head and shoulders pattern now. All we've got to do is break above 11,365, the upper Bollinger Band, and we are off to the races. And we could finally see a real good... I'm going to have to get on this trade. I don't trade very often these days because the market's been so rubbish. I don't want to sit in front of a screen all day scalping for 20 pips. But this is something that you could get on and run. And, you know, there's no reason why we can't go up to 11,900. So there's a real good... there's a good 500 ticks in this, possibly. Okay, well, the measured target, let me just have a quick calculate. Right, the measured target could take us up to the 500-day moving average 12,300. We could have a 1,000 point rally, obviously not in a straight line. You're going to have to put on a small position and just hold it and see if we can catch up with the US markets. But this is quite interesting. All right, that's it. I can't say any more on that, but it does look worth it. Let's just have a quick look at the weekly chart. Ah yes, I was forgetting my old friend, the head and shoulders top in the DAX on the weekly chart. So, this trend line now is becoming more irrelevant. Let's look at that in a minute. I forget how far that goes back. I think that's a 10-year trend line. But the necklines of the head and shoulders is still certainly relevant, and it topped beautifully exactly at that neckline. Now, you wouldn't have expected this big blue candle to follow this big red candle once we rejected the neckline to the head and shoulders. So that is very frustrating for bears. Now, we have 11,365, I think, is the break point on the inverse head and shoulders. But we're going to have to get up through 11,415 for further bullish confirmation. And then we're going to have to get up through 11,467. So there's quite a lot to get through. There is 150 ticks, really, of resistance to get through. But it's probably still worth a small long position if we break up through 11,365 and just sit and wait, see if we can get through this, because if we do, there's going to be an almighty short squeeze and we could rally up very quickly. And that's interesting to note how the 100-week moving average is around 12,300, which is close to the 500-day moving average, not a surprise, which would also work as a nice target and resistance where you'd probably want to be getting short. So this could be quite an interesting scenario. What would be a good strategy would be to add to longs as we break those resistances that I just talked about. Right, Euro stocks chart. This is worth looking at, seeing as after what we've just seen in the DAX. I'm just going to go back. Yeah, that's been quite a significant down move. Okay, now the Euro stocks, I'm sure you don't trade this, but still worth noting. Look how this inverse head and shoulders pattern has completed. Now, that's interesting. Big blue candle on Friday, ripped through all the resistance levels. This looks really good. This in itself could run up. What have we got as a measured target? Give me a sec. Well, we've got obvious resistance from, let me go, here we go. Trend line, well, firstly the 200-day moving average at 3,300. It'll be a bit lower than that when we get there. Although it depends how quickly we get there. We could get there on Monday at this rate. Then we've got this trend line here at 33.30. So 3,300, 33.30 is going to cause a few problems. We should at least pause there. Who knows? But who knows? Maybe come back down here. But we get through there. I think eventually we can get to 3,400. It does look like we could do. That would be a decent measured target. FTSE was already looking good once we got through the sort of 69.5 area, which acted as a base last week, which I do believe we were getting long at. This week looking good too. So, what does the daily chart show us? We don't have an inverse head and shoulders pattern here. Okay, so we're going to have to get up through the 72, 70, 73, 20 moving averages, and then we can follow everything else higher. I know this market is quite sterling pound dependent, and the pound's been weakening lately, which has given us a real good run, which is why we've outperformed the DAX and the Euro stocks. I think, guessing, I'm not really good on my fundamentals, but anyway, that looks pretty good. Quick recap on that Swedish krona trade, which Gavin kindly showed me. That beautiful breakout of the channel, or the triangle, whatever you want to call it. Unfortunately, I did say I wonder if we're going to come and dip back and get a buying opportunity. We only got to 9.18. We didn't get as close, well, to what I would have wanted to see, around 9.15, 9.13, and I haven't managed to get on this trade, which is a bit frustrating. We've got a negative candle here from Friday. Maybe this time we'll dip down to the mid-9, the teens area, the 9.16, 9.13 area, which would be a nice buy opportunity. Just keep an eye on that. If you are long, it probably is. Hold it. I think it looks okay. I'm not ruling out a dip back down here, so you may want to take off half the position and then buy it back if we get down here, but at least have some exposure on the upside, because this does look like it should go. Pound versus the Swiss. This is turning into a huge flag. The moving averages are no longer working, but the flag certainly is. Pound versus the Swiss. So if you probably haven't got a position on in this. But a break above 130.00 would be the buy signal on this flag. Let me just scrunch this chart up so I get a better perspective of what's going on. Yeah. I don't like this trade as much as I like the Swedish krona trade, but I think it will be a winner if we break above 113.00. Buy a little bit, shut your eyes, and just let it run and see if it gets up through 131.20 for another really decent bull run on that one.